I'm going to switch my screen over to the entire screen. Here we go. Okay. So, one of the things, as I said, I'm not going to call out specific services that are out there that talk about volatility. And vol is important, but I would contend it's only important in certain instances. And I know that's, the people who specialize in volers will immediately write me off. But Michael, you bring up a good point, and we believe observationally and as well as our analysis through math, there are times where you can take advantage of volatility, and one of those times is a Vanna rally, right? And so knowing when you're pouring gasoline on an already bullish fire is important. So one of the things that we have seen, and again, we've gone back and done analysis, is what happens when we see, or when the market, the people in FinTwit, the people on these other paid services, all talk about a Vanna rally. What kind of conditions were we in prior to that, and what kind of things lead to a Vanna rally? And so declining volatility, and we wrote about this. There's a write-up that I prepared up in Technical Questions, which talks about Vanna. And again, what the vision that I want everybody to have right now is pretty straightforward. What I want everyone to do is envision a balloon on your desktop, right? So literally look down at your desktop and put your hands out so that they're pointing up and down vertically, right? So your thumbs are both pointing up. And I want you to squeeze this imaginary balloon, which is effectively, let's call it a Vanna balloon. And so when vol is compressing, when it's coming down, what you're effectively doing in the vol curve, or in the vol second order response, Vanna second order response, is you're amplifying the magnitude, the height of the balloon, but you're decreasing the width of it. All right, so the tails start coming in, so the effect across strikes is made less, but the magnitude is higher. Now, let me open up another. Well, here, while we're here, so this screen that I have up here is VIX futures, and when we were talking just a few minutes ago, it was just noisy, right? So overnight, da-da-da-da-da. Now it's dropping a little bit, which is moving in the right direction, right? Volatility is typically measured in percentage changes. So, how much Vanna contribution or how much delta change are you going to get per 1% of change in implied volatility, right? That's kind of how it's largely referenced in the industry. And you can see cash VIX is coming down, which is good. We're all moving in the right direction, right? We're starting to drop in volatility, and that is really, we're pushing on the balloon from its sides, right? So if we push on the balloon from its sides, what are we really doing? So what I'm going to do now is I'm actually going to go up to our technical questions, and I'm going to see if I can find that write-up very quickly. Let's do this really quick. Vanna, understanding Vanna. Okay, here we go. And I'm actually going to put the link in our voice chat, just so everyone can do it. If you haven't read this, you probably need to read this. Copy message link, and then let me come on down here to trading chat, and I'm going to go here. Okay, so understanding Vanna. So one of the charts in there, and it should be on your screen now, and let me make it just a little bit larger so we can all talk about it. The balloon that I'm talking about, the Vanna balloon that I'm talking about, this is a single contract. It's centered just a little over 56 when I did the write-up. But it has in the right-hand plane, right? So spot price would be sitting right here. Vanna and Charm are second order functions that are zero at the money. So you can look at any Vanna graph or any charm graph, and where it crosses the zero line is where spot price was set in that particular model. So when you're at a 50 delta, there is no change, there is no contribution until you start moving one direction or the other. Now Vanna, what we're talking about here is you have a magnitude in the right hand plane, which is on the call side, the out of the money call side. You also have a magnitude in the left hand plane, which is on the out of the money put side. Now, why is this construct important, right? So this morning we're talking about volatility, and one of the cases that we want to see is we want to see a declining volatility, which scoots the tails, the strike distance, the width of the system in. And let me just kind of make this like really obvious. Let me open up this picture, which in this model is a very, very wide 25% volatility set into the complex. You can see how wide this is in this particular model, right? So again, same set point, or crossing. So it is what it is. But now let's go down to 5%, right? So I'm going to open up another chart here. So I want everyone to kind of mentally image on this, right? We got a peak at 5,700 roughly, and another peak down here probably at about 5,650, somewhere in that zone. And now I want everyone to take a look at this one. And this is a 5%. Now we're not going from 25% to 5%, but I did this as an example of just showing this is you pushing on the balloon from its sides, right? You decrease the width of when we decrease volatility. But the other thing I want you to look at the magnitudes. Don't worry about the units. Just say, oh, it's 1 at 25%. Look what happens here. It goes up to over 4, whatever the magic units are, as we decrease volatility. So that's the analogy that I want everyone to remember for both charm and Vanna. They operate differently, but their function looks the same, right? Their second order Greek looks the same in the way it influences deltas. So when you squeeze on the balloon, you are in a declining environment. You're literally decreasing the tail width, right? But you're magnifying the amplitude. Why is that important, right? So we talked about there were 4 criteria, right? The criteria were or are that we want to see effectively. Let's go back to TradeStation here. We want to see a decrease in volatility. And what we want to see is we want to see through vol M, and I'm going to call vol M here in a second. We want to see through vol M that we have calls going into the structure and puts coming out of the structure. Now we'll get to that part here shortly, but I want to, let's go back to this picture because I think it's important. One of the things that this is a single contract SPX single contract model, right? That's not the reality that we trade in. We trade in what's called the open interest surface. That's all the bets that have been placed by the market participants. And it's uneven. And so when you run, for instance, if you were to run a chart, $VAN on the SPXP, for example, you would get a 3D chart that looks something like this. Whoops, I can't get there from that one. Let's go over to this one. Here we go, open link. Here we go. You would get a chart that looks something like this. And what this is basically telling you is what is the Vanna contribution. It's the same picture as this, but now it's multiplied by the OI surface. And you get time looking backwards. So you get a sense of where does Vanna matter in time, right? And even sitting here on the day, on today, which is this leading edge that I'm pointing to right here. Let me make this a little bigger so you can see it. So this leading edge that's sitting right here is the 0 DTE or the next DTE, depending on what you're looking at. For calls on this side, you can see call Vanna, OI. And then over here, we have puts. You have put Vanna, OI, right? And you can tell in this picture, when I ran this picture back in 24, we had call Vanna that was really, really contributory. Now, why? Let's tie this together with this picture or this picture, right? So this is the single function or single contract function, right? So this is the OI. This is what we're trading with. This is the world we live in right here, right? Obviously not today, but in general, this is what happens when you take a second order function like Vanna and you overlay it with the OI surface. Super duper important, right? Because we posit, we say, we get a Vanna rally when we're coming out of a high volatility environment to a low volatility environment, right? We go from a wide distribution of where Vanna has lots of influence, but it's not very tall, to a narrow influence where it grows in magnitude. What's that mean in the context of this? It means we're amplifying. As volatility decreases, we actually amplify the impact of Vanna in the right-hand plane, and we also amplify it, because it's a balanced function, we also amplify it in the left-hand plane, which is this area down here. So we're amplifying the left-hand plane, and we're also amplifying the right-hand plane in a declining volatility environment. We're squeezing the balloon, magnifying the amplitude, which is magnifying the amplitude relative to where we were, 25% vol down to 5. I know that's not realistic, but it shows the point. So as vol collapses, we're amplifying that imbalance. We're amplifying what happens in the right-hand plane. So why is that important in the big picture of things? If through vol M, and we're going to hop over to vol M here in a second, if through vol M we can see that puts are being closed, we decentuate what's happening in the left-hand plane, and we decentuate what's happening from the calls in the left-hand plane. That's less relevant. We want the closing of puts here, making this combination less and less. And we want to see, the other condition is we want to see calls going into the complex, which is what we can see through the vol D and vol M tools. And that would amplify this amount for the day. So let's do that again. Let's make sure that we're clear on that. If we can somehow ascertain through vol M that we're closing puts, minimizing the impact that we have in the left-hand plane, then we're accentuating this, accentuating this, and then if we can ascertain that we're adding calls in the right-hand plane through vol D, then we're magnifying this as volatility comes down. So let's tie all this together. So when we look at effectively a declining volatility in combination with whatever the OI surface looks like around us, and in fact, let's just go do that real quick. I'm just going to go down to one of the charting channels, go down to charting 1 so you guys can see it, $Van, SPXP, let's do just the next 7 days, because that's fine. What's our SPX price? 6016. So I'm going to go I'm going to go 5915 to 6115. So 100 below and 100 above. And I just ran that in charting 1. You can go down and see the syntax. And I'm also going to run the net of this just so that we have it. Not that we necessarily need it, but then we'll wait for the squirrels to come back and tell us what's happening here. Just bear with me. Okay, so we've got this Vanna chart that just popped up. It's on the screen now, or it will be on the screen here in a second. And this is effectively what we're seeing in terms of Vanna, right? So we have in the we do have, because of some, some potential, looks like that's kind of interesting. We do have some fairly significant later this week, a couple of days from now, which will be either Monday or Friday. It looks like it's going to be on Friday, tomorrow, as well as maybe across the weekend. Some put contributions. So what we would like to see are some ability to measure our puts being closed, and then we want to amplify the calls that we're seeing in the right hand plane. So one of the ways we can do that is we go take a look and we say, first of all, what's the balance of this? And this was condition 4 that I brought up, and then here we go. I'm going to open the link, and it was that the net stat for the SPX, the SPY, the Qs, all were showing some balance or imbalance that was favoring Vanna. And I'm going to open up also the SPY because that was the one we were talking about. So here we go for the SPY. And in an ideal world, we're coming out of a high volatility to low volatility environment across all of these because they're all correlated. SPY has greater imbalance than what does the SPX right now. You can see minus 2 million. Don't worry about the units right now, but you can see we do have a positive balance on the right-hand plane. Same thing for the SPY, but it's bigger. That's cool. Let me just go get the Qs just so we can see, are we there? This is all automated for you, by the way. It's all down in the automated channel. So if you're a gold member or you're legendary, you have access to this, and I would urge everyone to go look at it. Automatically prints. Qs not so much, but they're close. They're close to parity, right? Close to balance. But the takeaway here is that in an ideal world, we have decreasing vol across all three. We have an imbalance on the call side, and now the question is that we have to answer to meet our conditionals. Are we closing puts below us, which would decentuate the left side, and are we adding calls, which would accentuate the right side, the right-hand plane? So the way we do that is we go take a look at vol M. I'm going to call it vol M first here for the SPX. So the first one that I'm going to do here is this, right? And I'm just going to kind of zoom in here a little bit so we can get a sense of what's happening. And this is a downward sloping trend line right now. So this is basically saying for the data that we have to date that we're transacting fairly close on this trajectory. And if the market continues to do what it's doing, we're probably not advancing a lot of calls above us. Now, this is all out of the money calls. There's no question. Price is coming up, which is generally associated with opening calls and closing puts. I'll talk about the puts here in a second. But why this is important is that, yes, we may be adding calls, but we're not doing so aggressively. Clearly, it's all above or out of the money transactions that occur, and typically that's what we see until we get later in the day. Price has a general uptrend to it, which is cool. I mean, that's kind of what we want to see here. So we have weak confidence. I have weak confidence that we're adding puts or adding calls. I have stronger confidence, especially given just the tight distribution around this line, that we're closing puts below us. If we were opening puts below us, we would tend to see a decrease in price. And if we were closing calls, which would be consistent with a downward trending line, we would be more convinced that we were closing calls and opening puts. We're not seeing that. We're seeing generally price action moving to the upside, which allows you to conclude, yes, we're weekly adding calls and we're basically closing puts here. Now, why did we want that, right? Because we want to decentuate the left-hand plane in these things, right? So for the SPY and for the Q or SPX, we want to decentuate the left-hand plane. That's this, right? Anything below spot price is the left-hand plane. So we decentuate this by closing that, and we accentuate the right-hand side. So if we go back to the SPX, then we accentuate this through the calls. So the 4 criteria that we want to see for a Vanna rally, and to be able to take advantage of it, right? That it's going to be strongly moving in our favor, is that we have an upper left to lower right type of decrease in volatility. We're seeing it since the cash market opened. We are seeing vol come in, and again, we can go look at where is it? Right here. We can go look at this, and if you remember the chart before that I showed now versus the chart now, you can see between the previous close, which is the black line, and where we actually are converging, right? So that we are decreasing vol, and that's cool. That's exactly what we would want to see here, right? So there's a couple different ways to look at this. You can either look at VIX futures, which I prefer to do, or you can just go to VIX Central, right? So that part works. So we've got this decreasing vol. Check. One of the 4 criteria are there. Second criteria was the vol M, and basically I just had the SPX here. Let's go look at vol M for the SPY while we're here for shits and giggles. Kind of the same thing, maybe a little more bullish. I mean, don't pull out your magnifying glass, but you know, the trend is up. This is kind of holding almost flat in slope. Clearly controlled ascent, which gives us confidence that the SPY is actually closing puts. Probably, not strongly, but probably opening calls here, right? We've got positive price action, and we've got a very, very tight distribution around the vol M line. Let's go here, take a look at the Qs while we're here. Again, just to kind of complete the picture. Remember, this was not as strong in the net stat when we looked at it, but yeah, it's kind of just horizontal. So technology is kind of noisy, but you know, you've got a mixed picture here. I don't think you can draw great definitive conclusions from this, except, you know, until we start seeing some positive changes here, right? We want to see transactions starting to really start to occur above these lines, which shows, and then price supporting that, which would be our conditions 2 and conditions 3. Condition 2 being, are we opening calls, right? We're accentuating the right-hand plane here. We're pouring fuel onto that amplification, that decrease in volatility gives us, and we're de-emphasizing or de-accentuating the put side of the equation, which is what this is. And I think for the SPY, we can certainly say it's there. But again, I like to see it across all of the major indices, especially since they're so heavily correlated, right? So SPY, SPX, and the Qs. So I think the takeaway is that, yes, we have the potential to rally today, but it's not going to be a knock your socks off 2% rally, right? We have setups that, as we have reducing volatility, that could contribute to positive deltas coming into the complex, which is what a Vanna rally is, right? And then the fuel that we add onto the fire is through the intraday activity through vol M, where we're actually seeing the puts being closed and the calls being opened. That, to me, makes it tradable, right? The other services that are out there do not, they explain and they talk about vol compression, and they talk about a lot of things to their credit, and a lot of it's over my head, right? I don't want to dive as deep because it's not, I don't want to have to go through all of that to be actionable. So from my perspective, distilling it down into 4 things that we can use the tools to look at. We can either make Vanna actionable or not. And so when vol is going the other direction, I don't even look at, you know, what's the necessary implications, because remember, we're expanding vol when it's going the other way, And when we expand vol, we reduce the impact of the OI surface, but we spread it across a larger range. That's a different topic for discussion. And you could argue that if I am going to expand volatility and put puts through vol M into the complex, I could actually add to that downward momentum. And that is absolutely true. Absolutely true. And that makes an expanding volatility environment actionable. But there are so many other things that are happening there. Primarily, people are opening deltas in a big way when the market goes down. And deltas swamp the Vanna, Gamma, and Charm boats when the market is moving down. Well, when it's moving in general. So we're not seeing a lot of strength either in this compressive vol environment. So like today, it's not overly strong, but we're also not seeing in general, a huge contribution from Vanna in this. And because of that, the other Greeks, namely Charm, due to time, will have a bigger influence if we're not having a lot of deltas in the complex. And if we're not moving spot price appreciable lot, now we do move spot price, but if we're not moving it all over the place, then Gamma starts becoming de minimis and doesn't really have a lot of impact until we start moving price. It's constant, but if a second order function is constant, it can be hedged easily. And so we're not, as far as I'm concerned, we're not moving a tremendous amount. To wrap this up, let's just go take a look here real quick and see what we're doing. All right, so we're up here at 60.27. Looks like taking a look at the tick here, this is the raw tick. Looks like we're above the line, starting to live above the line in total balance. So the markets are expansive right now. We're probably getting a little bit of a bump from Vanna, but I would say more of the bump is most likely from puts being closed as we move away from put closure. So with that, I know that was long, but I want everyone to kind of understand what Michael had brought up, and hopefully this is useful for you to understand the role that Vanna can and often does not play in what we're seeing in terms of overall change in deltas. Thanks, everyone.